You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, guys, welcome back to the Young Investors Podcast. Hamish, what's cracking where you are down in Melbourne? What's going on, mate?
Not much. Same old
you been up to
this
much?
week. No, not really. We were just talking off the air how I've kind of been super burnt out this week, which happens from time to time with what we do. We kind of go through these periods of last week was just absolutely insane. From a view perspective. So it kind of creates a really hyped week. And then there just tends to be at least in my experience, kind of a week where I just have no energy to do anything. So that's what I'm kind of going through, but that's okay. I'm not complaining, and it's a good opportunity.
You get on a roll, don't you?
Yeah.
And then you just push. And then after it, you're like,
Yeah. And it's a good opportunity to kind of reflect on where things are going. And, it's not a bad thing to take easy weeks. I think people who just stress you need to be 100% all the time and never stop. That just doesn't. At least for me, that never works. It works for periods of time. I think it's good to try and be extremely disciplined, but there's always periods where you need to take a break, or else you end up doing more damage than.
I have a real problem with that kind of hustle culture in a way, and I think Nate O'Brien made a good video on it semi-recently, where, for example, I was trying to battle through writing the rest of this script, right? And I was just getting nowhere, but I was just like, come on, keep going. It's late afternoon and I was just tapping away, really just getting nothing done, trying to force myself. And I was like, this is going nowhere. I'm so tired. I can't concentrate. So I was just like, instead of pushing myself, I just went home. I decided I'd come in early to work the next day. Yeah. I got here an hour early, and in that 1 hour, I got the whole rest of the video done.
Yeah.
I woke up, I was fresh, I was concentrating, I'd had some breakfast on, I was just done. And I was like, how was that so hard for me yesterday?
Yeah, I think especially with creative work, sometimes you just can't push through it by just trying to force yourself.
No, you can't force it.
You need to be in the right mindset, and that means maybe just trying to do something different that day, and then coming back to it even if it's 15 minutes. I find having a 15-minute break, or just doing something mindless for 15 minutes, like checking emails or whatever, doing receipts for your invoices or whatever, anything like that, just something mindless, and then coming back tends to help with, especially with creative work, I think so. Yeah. It is like that though. It's rare that I actually sit down and do a script in one sitting. I don't think I've done that in a very long time. I'll usually do pockets of it in moments of kind of inspiration, because you want it to be good as well. You don't want to just force it out and then it's just absolute rubbish.
What I do if I'm on a roll, if I'm really on a roll, I'll just verbal diarrhea. I'll write a whole script. It'll be trash, but I'll just write the whole thing, because I'm I know the points that I want to cover, and I want to talk about that. Then I want to talk about that. This is my thoughts, but I won't include statistics or data or facts. I'll just be this is how I see the video going. I want to talk about that, and I'll just verbal diarrhea, and then I'll have a break, then come back to it, and then turn that into something that's really nice and polished with all my stats and figures and stuff I want to talk about and whatnot.
Yeah. It is an interesting process. I'm sure most people probably don't even think twice about it when watching a YouTube video, kind of what goes into it. And I'm not saying your content is certainly much more involved than mine, for example, but even content...
It is now.
I mean, even for any kind of content, you might watch my content and think, oh, well, that's just such a relaxed video, but there actually is so much thought that goes into even simple videos, what graphics you're putting on screen, what jokes you might make, even though some of them will be kind of off the cuff. Some of them will be planned jokes that you thought of throughout the day. It is an interesting creative process.
And it's sometimes I'll get a comment on my video which will just be I'll be talking about some bit of news. It'll be oh, Brandon, you're a bit late to the party. Other YouTubers have already put out their videos on this, mate. You're last, or whatever it might be. And I'm yeah, but watch their video and then watch my video. It's like one of these videos has been polished for a week.
Yeah.
One of them was made in 2 hours.
Yeah. Yeah, exactly right. Yeah, your content's been so good recently because I think you're posting like
Claude's doing a ripper job.
Yeah, you guys are doing amazing stuff, like posting one a week. And as I've said to you off air, like before you had your editor and doing once per week, I probably didn't watch all of your content just because you're putting out maybe 2-3 videos a week. Yeah. But with one video a week and knowing it's going to be super polished, I always watch it now. And I feel like a lot of people kind of resonate with that. So yeah, it's been good. Guys, if you haven't heard, Brandon has a channel. It's called New Money. Is that what it's called? Do you want to?
It's called Fresh Dollars.
Fresh Dollars on where is it hosted on? Vimeo?
Yeah. Vimeo. What the hell? Vimeo. Yeah, that's exactly where it is. Fresh Dollars on Vimeo. Go give me a follow.
There you go, guys. All right.
All right.
What have we got?
Dear, oh dear.
Yeah, what have we got today?
Hey, we're gonna break our streak of not talking about inflation.
Yeah, what was our streak again?
1 week.
1 week, yeah, okay. And we did actually speak about it last week for a couple minutes.
No, we only mentioned it that we were not going to talk about it, so that doesn't count.
Okay.
So we're talking about Fed minutes. We're talking about Australia RBA interest rate hikes. You're talking about GameStop. I'm talking about some auto sales in China, which is more interesting than you might expect. Apple's introduced this interesting new feature on iPhones, and I found this really interesting article about. I'll just save it. You know, I don't want to spoil it. I don't want to spoil it. It's about air travel, but we'll get to that later.
All right.
We'll get to that later.
Well, with all of that said, today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can add them one by one, or using Excel. And once you do that, it will track all of the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans on index funds or individual businesses, it will track all of those, conversions for you, which is fantastic. And then also currency gains. If you're buying shares internationally or you hold foreign currencies, that's a big one at the moment with changes in federal funds rates that changes the relative strength of currencies against each other. And that can have a significant impact on your actual real return. So tracking that is very, very difficult to do without something like Sharesight. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your business, as well as use the track the performance of your portfolio, as well as use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. Use that link, get 4 months. Use that link, sign up to a free plan for as long as you want. You can track up to 10 holdings, or you can also use that link to get more premium features on a premium plan, and you'll get 4 months off a yearly subscription if you do. So go check it out. And thanks to everyone who's used that link and is supporting the podcast. Kind of stumbled through that a little bit this morning.
That's all right. I was just looking at your channel. That is your video now has 250,000 views. How insane! And then 93, and then 107. I didn't realize they'd popped that much in such a short time.
And then up from give the numbers on the few before that. Like what was it like?
Like 5. Yeah, like rough average of 5.
Yeah,
over the past. It's crazy.
It's complete insanity. So yeah,
that's so good.
Yeah, now I've got to back it up.
It's so interesting how we won't talk about this because we spoke about it last, but it is interesting how Michael Burry is like the topic at the moment. But we did speak about that last week, so we won't cover it now.
Yeah.
All right, what are we talking about?
I guess.
Can you tell me what's going on with the Fed? I saw the headlines, but I didn't look into it yet. What happened? Yeah, so
the news this week is just we have the June federal meeting minutes was released. So the minutes is the summary of of the Fed meeting that happened in June. So this is kind of old news, but it's not. It gets released quite late. I think 6 weeks after it happens or something like that. Next week will be kind of the big headline numbers, which I'll talk about in a second.
So kind of like it adds a little bit more flavor to the action that was taken after the meeting. Is that correct?
Yeah, we just get more of an insight on what they actually spoke about in the meeting compared to what they say publicly, essentially, which both of them tend to line up, but you get more of an insight on what the officials at the meeting were thinking and may talk about or may act on in following meetings and that sort of thing. So essentially officials at this meeting emphasized the need to fight inflation, even if it meant slowing the economy that already appears to be on the brink of a recession. So that's nothing kind of really new there. Members said that the July meeting would likely also see a 50 or 75 basis point move, which is, of course, on top of the 75 basis point move that happened in June. And they said they will continue to do so until inflation gets close to their 2% long run target. So again, it's just more fleshing out of, kind of what we knew. And on the note of being on the brink of a recession, if you actually look at the Atlanta Fed data, they have a tracker for kind of ongoing GDP in Atlanta. That's showing that GDP is likely to be on pace to decline 2.1% in the second quarter. So we've had Q1 data, which was negative 1.7 or something in that range, I think. And if this quarter, of course, that we're in, or we just finished, that we'll get data for soon, if that actually does decline 2%, then the US would, of course, officially be in recession.
Don't
which is
say
what everyone. Sorry, the US will be we'll be in recession.
Yeah. Get your clickbait ready, Hamish. Here we go. Recession.
Michael Burry was right.
Oh gosh, it's so sad. Watch it happen. I'm going to call it. Watch it happen on your YouTube feed. As soon as that does. So do we know when that data actually is officially released?
We do. So it'll be the 28th of July is when they give, what did they call it? It was kind of an estimated GDP number. So it's not the official one, but that's kind of that's what we use as.
Watch when that comes out. Your whole subscription box will be filled with videos that contain the word recession.
Yeah.
Guaranteed.
Yeah.
It's crazy. It's such, and this is just like a little bit of flavor. On the YouTube analytics that we get, a very highly searched term and a very clickable term is recession. So you can guarantee as soon as it happens, there will be videos with the title blah, 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 recession.
Yeah. And I mean, it makes perfect sense. It's interesting to people in finance, which is our core audience, but it's also interesting to anybody who has no clue about finance, who sees the news and, the US is in recession. What does that mean for me? US recession on YouTube. And that you're capturing an audience that is not in the finance, not obsessing over finance. So it makes perfect sense why it works. But it's
just fear mongering, click, fear, click, fear, click.
28th of July. Yeah. So you'll see my video scheduled for that. Imagine just scheduling two different videos. The US is in recession. The US narrowly escapes recession. You just
which one am I gonna or doing the same video, one titled "The US is in a recession," or the other one saying the US GDP falls for the second quarter. So it's like which one? I guarantee that you wouldn't even have to run that experiment.
No.
Recession would win every time.
Yeah, exactly. Also from the meeting, the Fed lowered their GDP expectation for 2022. So they've lowered it to 1.7% growth, down from the 2.8% that they had estimated in March. So continuing to kind of lower their expectations. And on the flip side, they also updated their inflation target for 2022. So the personal consumption expenditure is now expected to be 5.2%, up from 4.3%, which was previously expected. And just to give you a window into that, it's currently 6.2%, which is the personal consumption expenditure, different to the CPI. But another good measure of consumer level inflation. So they've updated the targets. They're creeping, higher as we've spoken about. They just continue to raise the bar. It's not really a forecast. It's kind of they're changing it in reaction to actual high inflation. So it's kind of funny to call that a forecast, but it is what it is. And
we've been calling them out on that for a while now.
Yeah. Look, it's the name of the game. I mean, they don't want to, I don't know. I guess it's just
they
how
don't want to spook people or something, but
yeah.
It's like if you make a prediction that's obviously not going to be correct, then why bother making it in the first place?
Yeah, and that's the point I've been making. They've just been consistently wrong for so long, and it looks like they'll never be wrong on the upside of it. They're always wrong on the downside by quite a few percent. Typically with estimations, you would expect them to be wrong on the downside and then overshoot on the upside, and then kind of oscillate between being over pessimistic and under and optimistic, but they just tend to continue to be behind. But next week is where the big kind of talk around the Fed and inflation will be. We get inflation data for June, which will be a big one. Is inflation continuing to rise above the, what was it, 8.6%?
Yeah, I think
that was recorded last month. So will we see that continue to expand? And then the Fed also has their meeting next Tuesday, I believe, or Wednesday for Australians, which is where they will hike. They're definitely going to hike rates. It's just a matter of, is it 0.5? Is it 0.75? Or is it actually something worse? We don't know. We will wait and see.
Do the full percentage point.
Yeah. I
do it.
Well, yeah, do they? I think they indicated, so Powell a couple weeks ago said that it wasn't off the table, but he tends to say, well, throughout this year. So he tends to say that a couple of months before that kind of hike has happened. So he said that with 0.75 hikes, it was a couple of meetings before we ended up actually seeing one. So, that kind of gives you an indication of, I think it would be unlikely to see a 1%
I don't think so.
increase unless inflation is absolutely spiraling out of control, which we'll see. We'll see what happens. We'll save that for next week.
We'll find out.
Yeah. Should we just continue on with fun central bank news, or do you want to take it somewhere else?
No. We're in the zone now. We're in the zone.
This is another, just a little one. This one's out of Australia, of course. Reserve Bank of Australia has raised interest rates this week. They did a 50 basis point hike, so 0.5% hike, raising the official cash rate, which is our federal funds rate equivalent, to 1.35%. Pretty significant rise there. Second quarter inflation, so Australia does quarterly inflation, not monthly, is expected to come later this month and is expected to be over 6%. So our inflation has been relatively quite a bit lower than the US and even the UK and the EU. So we've been somewhat shielded from it, but not...
I think ours is like 5% at the moment.
I think it was like 5.4, I want to say.
Yeah.
It's hard to keep track with all these single digit percentages.
EU, UK, US, Australia.
Yeah. It is kind of confusing. But yeah, so around 5%, and I think it's expected to rise to 6%. So but obviously that's considerably above the 1 to 2 to 3% rate that is expected. The RBA Governor, Philip Lowe, said in a statement, the board expects to take further steps in the process of normalising monetary conditions in Australia over the months ahead. And the markets are pricing for another half-point hike in August, and rates reaching at least 3% by the end of the year. So Australia, similar to the US, we're pretty much on par for where interest rates are expected to be by the end of the year. But as we know, expectations change quickly. So, take that with a very, very large pinch of salt. Big four banks, what do you reckon they did? Do you reckon they passed it on? The rate hike?
No, they would never do that.
Yeah, well, they did it last time. So you would think they'd have a month off, give everyone a break,
No, of course they would have passed it on, surely.
So they passed on just last night. So it was a couple of days after the meeting. They passed on the full 50 basis points to variable mortgage holders. And the hikes thus far this year have added around, for a mortgage of 620,000 Australian dollars, have added $400 a month in repayments. The increases in rate hikes in Australia this year. So
it's quite significant, really.
Yeah, and that is a big mortgage. Obviously, I think it's, as you said a couple of weeks ago, that's much higher than the average mortgage in Australia. But that's it's a considerable hike, and we're at 1.35%, which is in the scheme of things over the last century of interest rates, that's relatively low. So
pretty low.
Does kind of put it in perspective, but there you go.
And then you've got a public service announcement.
I do
on top of this for Victorians.
Just for Victorians. So just to segment out us Melburnians and other Victorians here, essentially.
High and mighty. I live in Melbourne.
Exactly right. Exactly. The best city in the world.
What'd you have for breakfast this morning? Avo toast?
What did I have for breakfast? Yeah, something.
Smashed Avo?
Yeah, with like gold flakes on top, like sprinkled on top.
Yep.
Yeah, you can only get them here. Yeah, they give them out for free because we're just awesome. So Yeah.
Classic.
No, but yeah, I'm sure probably most people in Victoria know this, but you can now access a $250 rebate on your energy bills. So essentially there's a $250 power saving bonus, which is a one-time payment for Victorian households to help ease the cost of living pressures. So super easy thing to do. If you're not aware, you just head over to compare.energy.vic.gov.au or just search Compare Energy or the 250 power rebate on Google and you'll be able to find it. And essentially all you have to do is go through this 2-minute application form and it will essentially show you competitive rates for your electricity and gas. And you don't even need to switch. You just have to go through the application to see the offers. And you can get your rebate. So super easy to do.
You're essentially getting paid to go and compare to make sure you're not getting screwed over.
Yeah, and the idea here is good. It's that, it's likely energy is one of those markets where people kind of people don't check that and change their providers very often, and companies take advantage of that. They raise prices up, so it gives you the opportunity to check. You don't have to change, but you might see the comparisons and be like, wow. My company has not been doing too well. Also, you can use our affiliate link down in the description. No, I'm just kidding.
It does sound like that. Yeah. Did you know? Very simple, 2-minute sign up, and you can get 200. It does sound like an affiliate thing. Oh dear.
You get 250. We get 250. It's a great deal.
Oh my god, that would be great.
Yeah, maybe I'll reach out to the Andrews government and.
Yeah. Oh, good old Dan.
No, so there you go. So go do it. Literally took me, I think, 2 minutes. So just go and do it if your name's on your bills. So yeah,
go get $250 just like that.
Yeah, and then sign up to Sharesight.
Exactly, with our actual affiliate link. All right, there you go. That's a lot of talking from you, Hamish. So a lot of macro stuff to follow and more to come. Should I talk about, we should probably talk about this. GM reports worst sales in China since the COVID lockdown.
Wow.
Yeah, pretty brutal. So General Motors on Wednesday reported its worst quarterly sales in China since the beginning of the coronavirus pandemic amid a resurgence of COVID-19 cases in the country and ongoing global supply chain problems. The Detroit automaker said it sold 484,200 vehicles from April through June in China, its largest market globally. Do you know that?
No, I didn't know that.
For GM. I did not know that either. So there you go. Sales were down. I guess that's why it's making big news as well, because it's like their biggest
their core market. Yeah.
Yeah, exactly. Sales were down 35.5% from a year earlier and lowest since 461,700 deliveries during the first quarter of 2020 when government COVID restrictions brought China's production to a standstill.
Right.
GM's sales in China include those through joint ventures and its well-known Buick, Cadillac, and Chevrolet brands, all of which experienced significant declines of between roughly 22 and 79%. Big range. So there you go. GM's second quarter sales in China follow the automaker on Friday reporting a 15.4% decline in its US sales.
Right,
during that time
so their
period.
China business is seeing quite a worse situation. I guess, yeah, as you mentioned, a big part of that's probably in relation to the much more severe lockdowns that are going on, or the lockdowns that are going on in China that are not going on in other parts of the world. So that is
exactly right.
That is interesting. And then, yeah, I mean, look, the auto industry is just going to be one of those industries that's going to get hit quite hard. A lot of people finance their auto purchases. So as interest rates rise, that's going to become more expensive. And it's also, for most people, a relatively discretionary expenditure that people can put off for a few years if things are not great in the money department. So
yeah,
I mean, it just
makes
sense.
This is like probably one of the toughest times you could go through as an automaker, for especially like you've got rates going up. There's supply chain issues for semiconductor chips, and if you have manufacturing in China, it's like all of those three things, like just the sheer manufacturing, like people couldn't go to work there in lockdown. So it's like you've got three big things that are like stacking on top of one another.
Yeah.
Which is a very, very difficult spot to be in. But I thought I'd chuck this in there because it does show like how much businesses can be affected by, just like a government saying, all right, we're locking down for X amount of time. It was like really bad. And in related news, actually, because we've just ticked over the end of the quarter, we have Tesla announcing their Q2 delivery numbers. And you know how it's kind of been like, record delivery numbers, record, like as we go, because they continually to just slightly improve.
Yeah.
This time round, it was not a record quarter for deliveries. In fact, it was quite the opposite. Quarterly delivery record was 310,000 cars delivered in the quarter. That was in Q1 of this year. And then this quarter, they did 254,695 deliveries total.
Wow.
So quite a significant drop-off, 55,000-ish less deliveries. So don't know what that is in percentages, but it's quite a bit.
Yeah, that's a lot. What's that, like 15% or something like that? That's kind of crazy.
It's quite substantial.
Wow.
Yep.
And look, yeah, I mean, it makes sense. It's not like it's any particular indication of Tesla's, business deteriorating permanently or anything like that, I don't think. Yep. But it is, that's fascinating to see because other automakers have been, struggling and Tesla has just continued to post these insane growth numbers. So it was often you see with growing businesses, even through a recession, they'll continue to grow just because they're still in that growth kind of curve. They'll slow down, but they will continue to grow. So that's also an interesting aspect to kind of see with Tesla, how that plays out over the year. Do they actually see a decline in their overall business over the year, or are they able to still scratch out some growth, but not the 50% per year that Musk is, hoping for over the next couple of years? It'd be interesting to see.
And interestingly, this delivery slump, if you can call it that, is because of the exact same reason why GM suffered, is because of China, because they note in a small paragraph alongside this delivery release, it says, interestingly, it says, that's what I just said. It says, in the second quarter, we produced over 258,000 vehicles and delivered over 254,000 vehicles, despite ongoing supply chain challenges and factory shutdowns beyond our control. However, June 2022 was the highest vehicle production month in Tesla's history.
Wow, okay, that's interesting. Yeah.
So there you go. Two kind of factors at play. But yes, definitely the number one thing that caused the drop-off is, supply chain, which is kind of just China. And also the fact that their Shanghai plant was literally like shut down. So I did a little bit of digging. According to the China Passenger Car Association, Tesla delivered just 34,000 cars in April and May combined. And then in June alone, delivered 78,000 cars.
Wow.
So quite a discrepancy when you run your factory for 2 months. You make 34,000 deliveries, and then you run it for 1 month and you make 78,000. You can see where the discrepancies come from.
Yeah, that's kind of crazy. Wow, interesting stuff. Wasn't I saw something about Cybertruck? Did I make that up in my head? I thought there was. I thought I saw an article about Cybertruck doing some kind of event or sales.
Cybertruck's getting there. They've locked in the design now for the Cybertruck, so that's set. Okay. And the rest of this year they'll just be just chipping away at making that production facility, or that section of production facility in over at the Texas Gigafactory. But I think recently they said Cybertruck's not going to be for like 12 months. Right, so I think we should expect the Cybertrucks to start coming out around the middle of next year. Okay. But yeah, if you wanted a Cybertruck, you're going to be waiting a long time at this point. I think they've got over 1 million pre-orders, so
that's right.
It's going to be. Yeah, Elon said a lot. He's said a couple times in the past that they've got like 3 to 4 years worth of backlog of production. Wow. So if you're ordering one now, you better be ready to wait.
Yeah, jeez. Crazy stuff. Wow. Okay. That's actually really fascinating that their June month was so high though. So they've really just seen maybe a supply shock, and it's not a huge, well, I guess it's just 1 month of June. So we'll kind of see how it plays out. But certainly it seems like the demand is there.
2 gigafactories are coming online at the same time, which helps.
Yeah. Well, I mean, it just certainly seems like the demand is at least still pushing, on the strong side for Tesla, which is a positive thing.
I think there's some interesting dynamics at play for the affordability of Teslas, and I think one of the main factors is the fact that fuel prices are so high.
Yeah.
So the fact that you don't really ever have to service Teslas, and the fact that you also have to pay absolutely peanuts to keep it running because you're running it off electricity, are 2 very compelling factors which I think are going to keep the demand fairly high.
That's really interesting.
Cars.
Yeah, so they do have this kind of offsetting effect that other automakers certainly don't have during this period.
It's interesting. And I think I've said this before. When you think about electric vehicles, if you compare like a Model 3, a Tesla Model 3, to like a comparable, like a Toyota Camry or something, if you look over the life of the vehicle, which is say, I don't know, 15, 17 years or something like that, what people classify the life of the vehicle, the Tesla ends up being quite a bit cheaper, like every time.
Wow.
But the problem with the dynamic or the cost profile is that if you buy an electric car, you have to pay a lot more money at the start because the purchase price is higher. Once you've got over the hurdle of the purchase price, then the ongoing costs are way lower.
Yeah.
Whereas with an internal combustion engine car, it's the complete opposite dynamic. The entry price is much lower because they're cheaper, but then you have to pay a lot more to keep them going.
Yeah,
to keep like servicing, petrol, that kind of thing. So it's just two different ways to think about it, and that's what like everybody's like, oh, all the electric vehicle community is just like, you should be driving a Tesla, but I'm like, gee, you guys, you can't say that. Like, there are people out there that would love to be driving Teslas, but they can't jump the hurdle of initial affordability.
Yeah.
So
and I guess that, on that respect, it would be getting more expensive because a lot of people would finance a Tesla, and financing is obviously getting more expensive. So even if you think of it in that respect of not an upfront cost, but what the payments are likely to be, then it's still, it can be quite expensive.
Yeah.
So interesting stuff.
All right. Yeah, that's Tesla. It seems as though China is getting back online in the auto industry.
Interesting.
At least.
Okay.
So we'll see what happens.
Yeah.
But, very interesting kind of case study of watching China do these lockdowns and then seeing, a couple months later when we get the Q2 results and whatnot, this is actual business dynamic of what happened.
Yeah.
Anyway, let's move along, shall we?
Yeah.
You want to talk about Apple?
Apple, yeah. What's going on with Apple?
Yeah, I saw this. I thought this was quite interesting. It's nothing that's going to change the stock or anything like that, change the business. But Apple
They're changing
is
their
introducing
name to Pear.
To what?
To Pear.
To Pear.
We are now Banana.
Oh my God, that would be ridiculous. Yeah, that would be absolutely ridiculous. Apple introduces lockdown mode to protect iPhones from state-sponsored hacking.
Wow, okay.
Pretty interesting. Apple announced a new feature for iPhones called Lockdown Mode on Wednesday to protect high-profile users such as politicians and activists against state-sponsored hackers. Lockdown Mode turns off several features on the iPhone in order to make it less vulnerable to spyware by significantly reducing the number of features that attackers can access and potentially hack. Specifically, it disables many preview features in iMessage. It limits JavaScript on the Safari browser, prevents new configuration profiles from being installed, blocks wired connections, therefore preventing the device's data from being copied, and shuts down incoming Apple service requests, including FaceTime.
Interesting.
So there you go. I mean, a very small sample size, I think, of iPhone users that will need to use this. And it sounds like it's going to be inconvenient to use it.
Yeah.
Because it sounds like it's going to restrict some functionality on your phone.
Yeah.
That other people will have full access to. But,
Yeah.
I mean, maybe if you're an Elon Musk or, I don't know, Ariana Grande or someone, or like a Joe Biden, who knows, maybe you want to be sure, or you want to do everything possible to limit the possibility of being hacked somehow.
Yeah. Well, just think about the sheer amount of people who would be trying to hack into accounts and phones for those kinds of people. It would just be just by the number of people who are engaging with their content or whatever, there's just bound to be a large number of people who are going to do that, whether state sponsored or not. So it makes sense. I mean, it makes sense that this feature would exist. Because there's just so many ways that your phone like kind of emits data and kind of connects with the world. It makes sense. Yeah. There's so many data points that it makes sense that you could have something that just kind of puts up the walls and turns it into a bit of a dumber phone.
But here's my PSA on the matter, right? If you're good at coding, hacking, whatever it might be out there, the tech giant Apple will pay up to $2 million to researchers who find a security flaw in lockdown mode.
That's pretty cool.
There you go.
So hack away.
So that's something that I did think, like, obviously this is good if you're a white hat hacker. They actually have, like, they're very valuable people to have because they find vulnerabilities and tell companies about them, so that they don't get hacked. they're like good guy hackers. But yeah, it's like, do you really want to be encouraging people to hack your new thing that's supposed to be for high profile people that's trying to make them be hacked less?
Yeah, you can imagine a hacker does this and gets in, and then they're like, oh, wait, do I tell Apple and get $2 million, or do I tell this company, this dark web company that's going to give me $100 million?
Or do I leak Elon Musk's, I don't know, whatever he's up to?
Which is more fun. Or do I just blackmail Elon Musk and get $1 billion?
Elon, I'll make this simple. Put me at the front of the Cybertruck line and I won't release your data. But there you go. So if you're good at hacking, go and hack lockdown mode and get $2 million.
There you go.
Actually, Tesla do this occasionally as well at like hacking conferences. They offer like Teslas as prizes for teams that can hack the cars.
Wow.
And then they just patch the vulnerabilities, and then it's like, great. So every year the competition gets progressively harder to win. Yeah. Because there's less vulnerabilities, but there you go.
Yeah, interesting. I know absolutely nothing about hacking or any of that stuff.
Oh, I know nothing either.
It is a fascinating kind of, I don't know, just avenue that exists now in this tech world.
How do you get into hacking? How do you get into it?
I don't know. It's like, I guess you just mess around with like simple stuff and then gets more complicated, but
it's like if you say, "Oh, I'm like I have a strong interest in hacking," it's like, are you like a shady dude?
Yeah,
it's like, do I want to know you? It's like you meet someone at a party. Yeah. You're like, "Oh yeah, I'm like a expert hacker." I'm like, okay, well, it's nice to meet you. I'll catch you later.
Yeah, I rob grocery stores, but I'm one of the good guys. I rob them, and then I go back and say, look, this is how I did it.
I tell them how I robbed them, and then I give the groceries back.
Yeah.
Oh, cool. Yeah, nice guy. Anyway, what else have I got to talk about here? The announcement comes months after revelations that state-sponsored hackers had the ability to hack recent iPhones with zero-click attacks distributed through text messages. These hacks can be successful even if the victim doesn't click on a link. That's kind of scary.
Yeah, there was a guy went on Joe Rogan and spoke about all of those kind of protocols and tools that apparently governments have access to, and some of them are absolutely terrifying. They're real. They used to have to send a text message and you had to click on a link. That's what a lot of basic hackers and scammers use. And then it transformed into one where they could send you a text message and you would receive an alert, but you didn't have to click anything, and the hack would be installed in your phone. Now there's one where there's no alert, nothing is alerted to you.
Jeez.
And if you turn off your device, which is what people often do, if you get hacked, you can turn off your device to kind of lock it on the phone, so you can, I guess, hand it into somebody and they can check what's on the phone. There's one where even if you turn off your phone, it just deletes every trace of it the moment that you turn off your phone. So
wow.
So there's some, I can't remember the name of the person, but I'm sure if you look up hacking and Joe Rogan, you'll be able to find the episode, and it is just kind of dropping what kind of technology is actually available. So there's clearly a purpose for this kind of software. So
right, there you go. Lockdown mode will not be on by default, but can be turned on from inside the iPhone settings with a single tap, Apple said. It will also be available for iPads and Macs. The new feature will be available for testing on a beta version of iOS this week before its planned wide release in the fall. So that's interesting. There you go. It's there if you want it.
Yeah, don't get hacked, guys.
Don't get hacked.
Change your passwords.
Cybersecurity. How much time we got? I've actually not looked at it. Oh, we still got time.
A little
Perfect.
while. Yeah. I've got just a little update on my favorite stock in the world. I'll give a little bit of a update around GameStop, which has of course been.
Oh, I thought you were going to say what's that deli stock?
I
can't remember what that's
called.
Hometown
International.
Hometown. That's right.
Let's have a look. You know what, for old time's sake. Hometown.
While we're here.
While we're on the topic, let's see if it's still functioning. Okay, the stock it's been delisted.
Has it? Oh, okay.
I think so, because I can't. It's on the.
Founder's been thrown in jail.
Wait, was it already on the OTC over-the-counter markets? I think it was, right?
Oh, I don't know.
I can't remember. Maybe it was already on the over-the-counter markets. I'm trying to find a stock price for it, but
it was worth 100 mil.
It was worth 100 mil. Yes,
that's right. What was it like? It was one singular New York deli.
Yeah,
one deli.
Yeah, one New Jersey deli, and it was just like one director who was also the wrestling coach of the school next door.
The school. Yeah. Oh gosh, that was classic.
Yeah,
so funny.
I think
can't find it. It might have been delisted.
Says there's 8 million shares and it's $10 a share, so I think it's 80 million in market cap, but it's got zero volume. So
okay.
I can't even see a chart. But
look, the guy's probably in jail at this point.
Yeah, he was
for something or other.
Yeah, well, he was issuing stock and he was paying dividends to himself. Like that's, I feel like that's just securities fraud.
That's pretty funny. Oh gosh. Anyway, I guess we got to talk about then your second.
I'm sorry.
Yeah.
Sorry, my second biggest holding after Hometown International, GameStop. GameStop's always a colorful company that's or stock that's got a lot going on.
Is it ever?
Yeah, they're making big moves that are going to drive value in the underlying business, I believe. They did a 4-to-1
gold
stock.
Miner?
Not a gold miner. They haven't caught on to that quite yet. So yeah, they haven't gone AMC's route yet, but they did a 4-to-1 stock split. Which means really nothing. But if the stock is around the price it is now, which is $127 per share, then after the split, the stock will be $32 per share, and there will be 4 times as many shares available. So nothing to the value of the overall business changes. If you have 1 share, you will be given a dividend of 3 additional shares, so you will have 4 shares. And it's as if they've taken your piece of the pie, piece of the pizza, and cut it into 4 pieces. So instead of having 1 piece, that you have 4 of an equal size overall.
Yep.
So naturally, with no increase in the value of the business, no changes to the underlying business, its profitability, just a simple cosmetic change to what the price of a share is.
Display their shares, yeah.
Yeah. You would expect nothing less in GameStop than a 9% after hours increase in its stock price, which is what it did. So the stock's up 9%, which is an interesting reaction. I tweeted. This is obviously efficient market hypothesis, in action.
I saw that tweet. That was hilarious.
So obviously,
clearly, GameStop, the business, is definitely 9% more valuable because of this.
Yes. And under that logic, I have actually petitioned the management team to continue to split.
What? Yeah.
Each 4-to-1 split is a 9% increase in value. And you run the maths. It doesn't take long for that to, it's not going to take long for you to get to a double or a triple. And, that's just checkmate. So I've sent a message to investor relations and I've asked them to, why stop at 4? Let's do a 4,000 to 1 stock split. And give the investors what they want.
GameStop has 80 trillion shares outstanding or something. Oh gosh, that would be so funny.
Yeah. Yes.
Yeah. Naturally, I mean, your reasoning makes sense. You split the stock 4-to-1, goes up 9%. So why not split it more?
Yeah, it's called pattern recognition, Brandon. Okay, if they split the stock. They split the stock 4-to-1 and it goes up 9%, it's going to happen again. So they just need to rinse and repeat. So as I mentioned, completely cosmetic. There's really 2 main effects that this has, which are actually, they have some utility. One is it can make the shares more accessible to smaller investors, but at $100 a share, it was already pretty accessible, let's be honest. It's a different story if you have an Amazon at 2,000, getting it down to 200, which I think they did a 10-to-1 stock split or something recently, then makes a little bit more sense.
And I was just going to say, even that hypothesis these days is getting weaker and weaker because so many brokers just do fractional share trading.
Yeah.
Now. So, and because that was the problem, like Amazon's at 3,000 and you had these, mum and dad investors or whatever you call them that want to buy in, but they don't want to sink 3,000. So a lot of the brokers were like, "Oh, is there a way we can get them in or allow them a way to get in?" So they use our brokerage service, and they came up with this fractional share trading systems to do exactly that. So now basically fractional share trading is on every broker out there. So it's like.
Yeah, you have a 1 cent portfolio. You can invest. You can probably invest in something.
But actually, but it's crazy.
Yeah.
But you're right. There is an argument that it makes it more accessible.
Yeah, and then the other utility is not for really outside investors, for the internal business. Companies that give stock-based compensation to employees below the executive level, where maybe they're getting $1,000 a year in bonuses in stock or something like that. They can be more nimble. If the share price, imagine the share price is $1,500 and they've got to pay $1,000 or approximately $1,000 in stock-based comp at a lower level employee, they can only give them either nothing and let it accrue or give them one share worth more than they wanted to pay. Whereas if it's $50 a share, they can just easily do exactly the amount that they want. So that's kind of the other internal benefit for the business. That's probably the most utility that comes out of a stock split in reality. But yeah, there you go. Yep.
That's ridiculous.
Interesting change. I am still every day. Well, not every day. I'm not that obsessive, but every now and then I check GameStop stock price and I just cannot believe it is still over $100 a share. It's ridiculous. Mind-blowing. Yeah.
And it's also ridiculous that beyond just the GameStop stuff, just in general, stock splits these days. Why is it that stock splits make stocks go up? Like, that is legitimately a trend of the last couple of years. It's like a company does a massive stock split, immediately their stock goes up by like 5 or 10%. It's just like, what the hell? This is stupid. It doesn't make no sense. Yeah. But there you go.
Here we go.
Can I talk about my fun story now?
Oh, yes.
I would love to see this. I really want to see this. Economy passengers could soon lie down on airplanes. Meet the airline that's doing it first. Guess what airline it is? This is my favorite airline.
Is it Australian airline or international?
No, it's not.
International? I don't know. Sounds like a gimmick. So it's probably something like American Airlines or something like that.
Oh, no. I hope it's not. It's Air New Zealand.
Oh,
Air New Zealand. I've never had a bad flight with Air New Zealand.
They're a good airline.
So good.
Yeah.
So good. Anyway, it says here, economy flights practically guarantee a stiff neck, a child kicking the back of your seat, and competition with your seatmate to claim the middle seat's armrest. Damn, isn't that just correct?
Yeah, I got stuck with the middle seat between Brandon and Tom on a 14-hour flight. So with no armrests. So So yeah,
man, I was surprised at how much we were able to sleep on that flight.
I definitely surprised myself.
So
yeah, I think just sitting and doing nothing, I was just bored. So I was just like, I just want this to be over. I just just fall asleep.
Yeah, you'd read like half a chapter of your book and fall asleep.
Yeah, exactly.
But yeah, anyway, one airline wants to cure these traveling ailments. Air New Zealand recently announced the world's first lie-flat pods for economy class aeroplanes, set to debut in 2024. The concept, called SkyNest, has been in research and development for 5 years and will likely feature 2 rows of 3 stacked bunk beds for a total of 6 full-length sleeping pods for the whole plane.
So do you?
So it's like,
do you book a seat and you get one, or do you share them? Like, do people?
No, I think that the title was a little bit deceptive on this article. Because I think it's like available for economy passengers, but you'll have to pay a fair premium extra.
Yeah, you could spread out your legs at the small cost of a business class seat.
Yeah, exactly. Exactly right. So there's a total of 6 full-length sleeping pods. The beds will be installed on Boeing 787-9 Dreamliners and will exist in addition to regular seating sections. Okay. But the pods, which will include cooling pillows and ventilation outlets, likely won't come cheap. Prices have yet to be announced, but Air New Zealand says 4 hours of access to a sleep pod will cost an extra fee on top of your economy ticket.
Right.
And this is where it gets interesting. So I'll keep reading. The airline did a fair bit of research around sleep cycles, and an Air New Zealand spokesperson told CNN Travel last week, actually this is a few weeks back, a typical sleep cycle is around 90 minutes. So a 4-hour session gives the opportunity for customers to wind down, fall asleep, and wake up again. The bedding will be changed and the pods will be cleaned for 30 minutes in between every session, according to the airline. When Air New Zealand initially announced the concept in 2020, transportation analyst Seth Kaplan, not Seth Klarman, Seth Kaplan, told CNBC he was skeptical that economy passengers would jump in line to try it. People who are paying the lowest possible rate for a ticket probably aren't interested in ticket add-ons, especially when the pods will occupy much of each plane's already limited space. Quote, the airline business, and this is an interesting way to think about it, which I never really think about, the airline business is a real estate business, Kaplan said. Air New Zealand will have to ask itself if those beds will bring in more money than economy or premium seats in the same space.
Yes.
And once I heard about that, I said, you know what? I completely agree. And that's why I think that this will last for maybe 6 months and then will be scrapped.
Yeah, it would be interesting. It is an interesting business. There's a great video, I can't remember who made it, on YouTube, talking about the economics of airlines and how they make much more money from the business class segment and the first class, even though there's far less seats. They're making, I think it was business class was equally as much as on average as the economy section, where there's far more seats obviously in economy. So it is an interesting dynamic, and yeah, you would have to see how much space do they take up, how much additional, and if they're targeting it towards economy passengers, you can't imagine they're going to be able to charge a huge amount more, which is what they can do in business and first class to get that, make up for the fact that there's less seats. So yeah,
that's exactly the thing. They're going to have to price. So with business, you can lay your seat out.
It depends. It depends on what airline it is. Yeah,
but you would imagine. So they have to hit with their pricing. It has to be between economy and business, because they,
yes,
there has to be. Otherwise, business is like redundant. You just get an economy seat when you want to go for a sleep.
Why would you want to have an economy seat plus have to go and sleep in a pod where you could just have a nice business seat where you just recline it? Yeah.
Yeah. Or if they get the pricing wrong in the other direction, why would you need a business class seat when you can just sit in economy? When you need to sleep, you go to one of these pods. So it has to come in between those two. And you're right, beds, even if it's stacked 3 stacked bunk beds, they do take up a fair bit of space. So you have to, I just can't see how this will be. I mean, they're operating in such a narrow price area.
Yeah.
That I don't know if it will actually turn out to be profitable.
Yeah, I don't know. I guess we'll have to see. It is an expensive test because they obviously have to fit the airline with the bunks.
Yeah.
And if it doesn't work,
I don't reckon this will be on many aircraft.
No.
I reckon it'll be a trial.
They'll just trial it. But even still, I guess that's in the scheme of a business, it's not going to be that much of an expensive trial. But yeah, it would be interesting to see. I would imagine there'd be people, as you said, the first 6 months, people would probably love to try this just as a gimmicky.
I'd give it a go.
Yeah, I'd almost give it a go too, just to try it. But if that's going to be an indication of the long-term success of it, I don't know. It is interesting, the airline business, how it's just all add-ons. Like, how can they... 1 extra kilo of baggage? Well, that's $100 if you check it at the airport. Like, it's just all about those additional fees that they can kind of squeeze out of you, especially on domestic flights where they're trying to keep the cost of the ticket low. It's like, $80 ticket. Oh, but if you have a bag, it's extra $40. Oh, you want a coffee? That's $6, even though it's out of a tin pot.
Yeah, exactly. Interesting. Interesting. I wonder if it'll be. Do you think it'll be successful? Yes or no?
I don't think so. No.
I don't think so either.
I don't think they'll be able to charge enough to make up for the space.
Yep.
Yeah.
But I mean, they must be confident because they know this. They would have been running the numbers in their head.
Yeah.
So clearly they've got a price range and a case to be made. So hopefully it works because, I mean, that'd be great. I would love it if I could just get an economy class ticket and on a long flight, I can go for a snooze.
Yeah.
Would love it.
Absolutely.
Or even if I don't sleep, even if I can just lie flat and just like chill out on my phone or listen to a podcast for 4 hours. That'd be great.
That's the most uncomfortable thing about taking an economy ticket flight is just not being able to...
in the same spot, can't move.
Just not being able to sleep properly. Yeah.
Yeah. It's a pain in the ass. All right. That is all the news for today.
Yes.
So with that said, let's move on to some Q&A. So
yes.
Can I ask you this question, Hamish?
Sure.
Interested in your Netflix buy. My impression is the streaming market is saturated and quite competitive, and Netflix has lost their moat. Have you talked about why you own in another episode?
Yeah, I don't...
So, Hamish, without... I'm going to put a time limit on you. You've got like 3 minutes.
Okay, I'll look...
Okay.
Yeah, okay. Yeah,
Careful.
I don't think I have... I just want to say, I don't think I have spoken about it. We've spoken about streaming a lot. I really don't want to convince people to do what I'm doing. I really don't. I like teaching people why I think the way I think and how you can apply that to businesses, but I don't want to convince people. But I think with Netflix, I think you need to think about it in 2 different markets. One is the US market, and you could even also segment UK outside of smaller international markets where there's different foreign languages spoken in a lot of different markets. You kind of have to think of it as 2 different businesses. In the US, yes, it's very competitive, and that's kind of the face of Netflix. But they also have the highest spend that people spend on media. It's very, very high. And Netflix has by far the best churn rate, retention rate, and engagement in the US. They're also the only streaming company that's actually profitable from streaming, which is kind of crazy since they have over 200 million subscribers. So the fact that they only just got profitable shows there's a significant element of scale economics that happens in streaming. And the other thing that's interesting is all of the other media companies that are not profitable they're funding their streaming service endeavors with revenue streams that are getting cannibalized for streaming. So they're in this kind of sweet spot where they've got revenue coming in from streaming services, but they're not profitable. They're only profitable because of the affiliate fees that they're receiving from cable companies and advertising they're running on cable and broadcast networks. Revenue streams that will be going away. So it is that's a counter-positioning argument, which you can look up in 7 Powers. It's a great book by Hamilton Helmer. talks about counter-positioning. And then you can think about international markets where there's basically no competition. Disney is making a lot of content in India, but outside of that, Netflix is really the only company on a big media scale that is making a lot of original content in areas like Japan and Korea and in Latin America. Some of these areas where there's a lot of people willing to spend money on content. So yeah, I think that's how you have to think about it. But that's kind of my overview. I think I went over my 2 minutes. So
no, that was good. That was good. Nice, concise, summary of.
The only thing, it's impossible.
Things to think about.
It's impossible to put an analysis into 2 minutes. So that's like a second.
There's like some points to look into.
Yeah.
I think Netflix should get into using the volume. Have you seen that? That's what Disney's using to keep the cost of their shows lower.
The volume?
Where they
explain?
Yeah. It's where they set up. It's like a set, and the set's surrounded by screens.
Yes. Yeah.
So it's not blue screen or green screen. It's surrounded by monitors.
Yes.
And what they do is that they've got these set designs that they put up on these screens, and it's a big like computer program with the camera as well. And when the camera gets moved or pans or whatever, the screen behind changes accordingly so that it looks like they're in a real location, and that screen, that set is actually like 100, 200, 300 meters off in the distance. Really smart technology that Jon Favreau's worked on.
There has been some amazing technological advancement in the media space, and the cost of production, especially with CGI now, is far lower for the quality that they can get out of the content that they produce. It's actually incredible. So yeah.
So a lot of if you guys have watched like some of the Star Wars Disney Plus shows like The Mandalorian or The Book of Boba Fett or Obi-Wan Kenobi, a lot of those locations were just in a studio.
Believe it or not.
So they don't have to go to they don't have to go to Tunisia anymore or anything like that. It's pretty ridiculous.
Yeah, they don't actually film on other planets. Believe it or not, they used to do that back. If you watch the old,
but it's like Tatooine, Tunisia is Tatooine for people that don't know. And they haven't gone back to Tunisia. They just recreated it in the volume, and it's good enough that they can just get away with it. But anyway, very interesting. Should we do one more?
Yeah. Which one do you want me to go to? Which one of these two?
Let's go the first one.
This one. Have you seen Chinese Elon Musk?
I was talking about the first one up higher. But yes. No, ask me that one anyway.
Have you seen Chinese? Oh, wait. Which one do you want?
Both.
Oh, you want? So I'll give you the first one then.
The funny one.
The funny one. Which one? This one. Oh, have you seen Chinese Elon Musk? He also owns a Tesla.
Yes, I have. It's hilarious.
Yeah,
okay, there's not actually a Chinese Elon Musk. Let's be clear. That is 100% a deep fake.
That's right.
Yes, it is 100%. Don't be fooled. That is definitely a deep fake. However, having said that, it is still hilarious.
Yeah. I saw some people like questioning whether it was a deepfake. I for sure that has to be a deepfake, because that would just be
100%.
That would be a ridiculous doppelganger if that was not deepfake.
Yeah. No, it's definitely deep fake. You can tell. If you look close enough, you can tell when he moves and how his face doesn't quite keep up with the rest of his head. Yeah, you can definitely tell it's deep fake.
Okay, let me give you a more serious question.
Okay.
Hi guys, loving the podcast, listening here in Marabella in Spain. Question, what podcast do you guys listen to, not just investing, but also lifestyle and general interest?
I'm a bit naughty. I don't really listen to all that many investing related podcasts. I like to listen to the Phil Town one, Invested. I listen to Tom. Tom's got his podcast, but he's not like a weekly podcast or anything, but like he's interviewed people like Guy Spear in the past. So they're really good value episodes on Tom's podcast. But apart from that, like my podcasts, I listen to more for entertainment.
Yeah, me too.
So they're just, really? Yeah. So all of the podcasts I listen to are just aligned with my interests. So because I have a Model 3, so I listen to Ride the Lightning by Ryan McCaffrey, which is a Tesla podcast. I am big into Formula One at the moment, so I listen to WTF1 and The Race. I'm into video games, so Xbox gaming more specifically, so I listen to Podcast Unlocked, which is another Ryan McCaffrey podcast. I listen to Waveform, which is Marquez Brownlee's podcast, tech podcast. And they're the main ones that are on my kind of regular rotation. Occasionally I'll chuck on The Economist, does like 5-minute daily briefings, which is kind of handy.
Yeah. Yeah, okay.
Kind of economy news, but yeah. What about you? What are your podcasts? Or I don't know, forms of entertainment that you like to watch?
I occasionally will listen to the Investors Podcast Network has a lot of good finance-related podcasts and sub kind of podcasts and that sort of thing. But yeah, mostly I do listen to a lot of Joe Rogan. He has interesting people on. I definitely don't agree with everything.
To get more into Joe Rogan.
Yeah, I mean, some episodes can go quite political, and I don't, sometimes, obviously, a lot of the time, I don't agree with what is kind of being said. But I'm kind of the person I love just taking in and understanding why people think certain things. Especially popular views that I disagree with. It's just fascinating because obviously a lot of people believe these things one way or the other and have strong opinions. So like why? Like let me understand like on a human level why. So I like listening to that. Lex Fridman does great interviews. It's kind of a similar lane, I guess. A lot of politics and philosophy and economics. And then a fun one, Tim Dillon he has a great comedy podcast, which is just absolutely hilarious. So I'd highly recommend.
I have to check that out. Did you see recently Joe Rogan came out and said that he's been asked multiple times, Donald Trump has asked to come on his podcast and he's turned him down?
Yeah.
That's crazy.
Yeah,
but fair enough.
Well, his philosophy is that he wants to... He knows that Trump's going to come on with his facade and just to promote his campaign. Whereas Joe would want to actually ask him, tough questions, and he would want to see a real Donald Trump, and he doesn't think he would get that. Whereas with other people, it's like a public figure, and he can talk to them and just get, behind the curtain in a way. Because people often have like a public persona and how they actually feel, and he tries to get behind that. He doesn't think he can do that with Donald Trump, and that's probably fairly accurate, I think. I don't think he would let the guard down and admit that he's made mistakes, which he clearly has, and so
no, very true. All right. Is that it?
That's it. Thanks, everyone, for tuning in. As always, of course, if you have questions, head over to the YouTube version of the podcast and feel free to leave your questions as a comment below the latest episode, and we'll try to get to as many as possible each week. Thanks to Sharesight. As always, sharesight.com/young investors. You can sign up to a free account or a paid account and get 4 months off a yearly subscription. Thanks, Brandon, for joining me. As always, hope everyone has a great rest of your week, and we'll see you guys next week.
Catch you later.